Good morning. It's Vijay here. Welcome to yet another episode of Pre-Market Commentary. Please note I'm not a registered, SEBI registered analyst. These are my original thoughts. Please take care before you actually proceed on anything which I say here. In many years ago, of course, the old timers will remember there was a very famous band called ABBA, and their most famous, one of the top hits was a song called Money, Money, Money. So today we are in a situation where we are going to see money, money, money coming from all four sides. We have always analyzed the markets based on three or four parameters. The first one is fundamentals, the second one is technicals, the third one is sentiment, and the fourth and most important, in my opinion, is liquidity. Now, liquidity is now going to slosh around the globe in through various actions of the central bankers and of the governments. So now let's look at this chart before that. So where are we when the liquidity is going to get sloshed? So if you take March of every year, liquidity is very tight, especially in India, because you have these advanced tax payments, or you also have the situation where people want to book losses and carry it to April. So if you look at the past few years, March 20 of the March 2020 was one which a lot of people may forget, or it was the beginning of the Robin Hood syndrome. So it was a huge fall in March 2020. March 2021 also, it was going up, it paused, and then it paused for a few days in April, and then the market took off. Then if you take March 2022, market was sideways, and then it paused. But if you had, that is March 2022 is the time when the Ukraine war was going on, so one could have expected pressure on the markets. Even then, the bank Nifty bottomed out in March, though the Nifty came down to 3 months. But if you see when it bottomed out and when the March bottom was not much of a difference. Then you take March 2023. March 2023 is the time when the Adani imbroglio was on, and we had the Hindenburg ruling the roost, and Supreme Court was took action, or at least thought that they'll take action, and then the market bottomed out in March of 2023. Then let's look at March 2024. Market was rising. SEBI chairperson came and said market is overheated. So there's a lot of selling during March of 2024. A lot of people may not remember it, but soon after selling, somewhere around March 15 to 20th, market bottomed out and then took off, even though it was election season. Today, we are in a situation very, very unique, because last 5 months we have had a fall, and liquidity is very scarce among retail investors, but liquidity is good among the institutional investors. And further, RBI is going to pump in more and more liquidity. So let's we come to that. Let's just look at what happened yesterday. Yesterday saw markets seeing big gain from opening levels. As I've been mentioning, that it is darkest before dawn. This is one of the times. And I also mentioned that this too shall pass in my yesterday's video. It looks like the dark clouds are finally giving way to some sign of light. So 10 days the Nifty had fallen. So yesterday was the 11th day, and 11th day it turned around. There is enormous amount of negativity in the market still. People don't believe this. They think it's a dead cat bounce. But if you look at a longer picture, if you look at history, then it tells us something else. So Sensex and Nifty recorded the biggest single day gains in a month. I'm just going to run through this because this is not very, very important. Broader markets outperform Sensex and Nifty. Then the advanced decline ratio 7:1. Normally it is the other way around. For many, many days we have seen advanced decline ratio 4:1, 5:1 in favor of the bears, or in favor of the decliners. Here it was 7:1, which is very, very huge. 45, 50, 90% of the Nifty stocks closed in the green. And Nifty Bank actually did not do as well as Nifty and other sectors, but nevertheless, Nifty Bank did gain. Metal stocks surged on positive Chinese cues. Incidentally, metal is the first sector which is trading above the February 3rd, 4th highs, which we saw around, that was, I think, 23 something, 23,000 levels, 23,360 levels. So now one may want to look at metal stocks with greater amount of interest, because this is the strongest sector as we speak today. In 2023, in 2022, sorry, I identified three sectors: Bank Nifty, Auto, and FMCG, because they bottomed out in March. And even when the Nifty was struggling in May and June of 2022, these three sectors were strong. So even if Nifty struggles, I think one should look at metals, and we should give some time, of course. There's no advice here, but this is what my analysis says. Then what happened to the global equities yesterday? Dow Jones went up 1%, Nasdaq 1.36%, S&P was up 1.1%, and DAX. You look at DAX was 3.38, because why? Because huge amount of money is going to come into the German economy. CAC, of course, followed DAX because it generally follows. I mean, money will flow into when you say Europe, France will be the biggest beneficiary after Germany. FTSE, of course, was flat because it is not exactly in the Euro land. And Brent crude, again, it fell below actually 69. It went to 68.38. Now it's about 69 and odd. So slowly and steadily, the Brent crude is coming down. 65 is my target. Trump is looking at $50 for the NYMEX crude. If it is $50 for NYMEX crude, generally there is a 5% difference between NYMEX and Brent. So we should actually go to $55. But 65 has been my estimate since it was 80s. And I don't think there will be any difference. I mean, I think the path has been set. Gold and silver did nothing great. Copper has started slowly going up. And so what are the action? Yesterday, Germany green-lighted defense and infrastructure spending. So 500 billion euros, 11% of GDP investment was fund, which is written into the constitution to be spent over 10 years, of which 100 billion are set aside for the 16 states. So $500 billion is going to come into the system there. And they're also going to change the constitutional debt break by exempting defense spending above 1% of GDP. Another change in the constitutional debt break. Basically, they have some constraints that you cannot take so much debt. You can take only this much debt and not more. But they have changed, they've exempted the defense spending. Then they have also introduced a structural borrowing allowance of 0.35% of GDP for the states. This is huge. No wonder DAX is really running away. So what was the reaction? Of course, this also is inflationary. So the European yields went up. And this was the biggest move since 1990 of GDP for states. Then yesterday morning, we saw China unleashing a fresh wave of stimulus, setting a growth target of 5% despite tariffs, and raises budget deficit to 4%, highest in 15 years. Locally, RBI again jumped into the fray. They're planning to hold a $10 billion USD rupee buy-sell swaps for 36 months on March 24th. They announced an OMO purchase of G6 for 1 lakh crore in two tranches. First tranches of 50,000 crores will be held on March 12th and the remaining on March 18th. Then they also say we'll continue to monitor evolving liquidity and market conditions. RBI is very active in pumping liquidity into the system. Please note, we are in a situation where, everything is looking bad, but the big guys are pumping in liquidity. Today, what we need to watch as far as India weekly Nifty expiry, more important than that is the ECB rate decision. Will be the news conference is there, and the markets are looking at a quarter-point rate cut. So you will have this continuing rate cut. This month is of euros, ECB. Next month will be Fed. Next month will also be RBI. All of them will begin to continue to cut rates. You can imagine the liquidity flood, and that's what the market needs. Market is very light. Actually, market is on a bearish mode because FIs continue to have an open position of about 82 and odd. Their highest was about 84, 85. They have not cut. So market is heavily short. In sentiment is very poor, and here we are having the big guys, getting into a liquidity, I would say. So you know what to do when the markets are pushed into liquidity by the central bankers. You will invariably know what is going to happen. So nevertheless, one should be careful, I feel. But I continue. Yesterday also we were very aggressive. Thank God we were successful. Day for yesterday we were aggressive. Again successful. Hopefully we'll have today also a good day is what I feel. Buy BTFD is my mantra. So whatever you do, I hope it is successful. Thank you very much for joining me.